Hello, get traders. Uh, I had a pretty good day today. I had a couple losing trades and it has some real big winning trades, especially in Boeing. But things are stabilizing a little bit. The VIX is coming off a little bit. The main developments today, there were some major breaks. Whenever you're moving into a bear market, I look at crossing different zones as one more lever to get us closer to a bear market scenario. And we did cross some more levers today. And one thing I want to point out, Monday we first, this trend line here, we first gapped below and tried to recover it yesterday on our TLT. And today we just, on actual real physical data, bonds sold off on hard news, not just speculation. They had a treasury auction and it was not very good. So we are finally pokering below and outside the cloud on our monthly charts. So this can accelerate pretty good here, all the way down to 116.69. So there could be a pretty good rise for over the next few weeks here in interest rates. And as you can see right here, we closed near the lows of the session after breaking in that trend line today. Now this is a one-day break. We may go consolidate for a few days before continuation, but it is a substantial break of this trend line below monthly cloud support here. So keep that in mind, that this is a very good scenario for continuation even starting tomorrow. Another one I want to talk about, and that's USO. This is my daily chart. Let me okay, yeah, my daily view does a pretty good job here. These I like using fib fans, and they work really well with crude. And I saw a scenario that was happening this morning uh, with the crude breaking down. I was using my 15-minute chart here, and we were coming crashing down uh, early for 10:30 or so. One second here. Yeah, about 10:30, we were right here on this fib fan zone, and I'm in a couple chat rooms, and I hollered it out. Uh, that crude's just about ready to tank and crash, and as soon as the news hit the wire, boom, crude started selling off and crashing down, and it didn't even have a reprieve or anything. Now we could see some responsive buying back up to the 1243 area tomorrow, 1244 area. Um, I'm not saying it. Even at the end of the day, you see this high volume, um, uh, so it's hard to say how crude's going to come out here. I don't think this is a buy zone for crude myself. To complete the pattern in crude, I'm thinking 1217 is likely the target. We were getting quite a bit. We developed quite a bit of volume here today. So and it didn't close right on the lows, so it's probably not going to do that for a few days, or maybe not even until next Wednesday. So I just wanted to point that out. Crude is a very bearish scenario here. Now, real quickly, technology tends to have trouble in higher interest rate environments, especially with they have a lot of debt on their balance sheets in some of these techs. So it's only logical some of these high price earning ratio stocks are going to come off their highs with the S going into higher interest rates. And from what I can tell here, with these wicks on top of these candles these past 3 days, and we closed at the lows again today, and even Amazon was leading the charge and even trading lower in after hours to the lows of the day. I'm thinking technology is starting to resolve lower here. We've broke our signal lines on the daily, and it's finding a home down here, building out value down here at these lower price points. And one thing that I've pointed out in my other videos, I stair step the cloud information to how risky a certain sector is, and now I start with a 15-minute, then I go 30-minute, 1 hour, then 4 hour charts. Well, this is the last intraday chart to finally break on the technology sector with the clouds, and we are right as soon as it's come up to the cloud. The past 12 hours, it has gotten responsive selling right off, back off of it. And this afternoon, the later half of this afternoon, it never even touched the cloud. It just started falling out of bed. So this is and it's bouncing off the 4-hour, 200-day moving average so far. So this is more of a bearish take on technology. Just keep this in mind here. We did have Tesla come out tonight. We got Nvidia coming out tomorrow night. But the 4-hour chart seems to be acting as resistance. Now our industrials are holding out a little bit better, but they are still very extended, like a lot of the market. So just keep this one in your mind. I want to show you the 4-hour chart on it. And as you can see, the daily chart seems to look like the industrials are a little bit better. But then if you look at it at the 4-hour chart, it's even having trouble getting back up to the cloud. We're finding some resistance right here today. So in my opinion, there's actually a little bit more bearish case for the industrials despite the move even for today. Another one is your XLV or healthcare. And on this rebound, we've had a far less bounce off the 200-day moving average on our healthcare. So this is even a more bearish take. And we're just finally got back into the primary trend. So to keep this one on your watch, it seems your healthcare is acting even more bearish than the other two. And to confirm that, we are not only below the cloud, we're even having trouble to getting back up to the cloud at this point, and we're on the 200-day 4-hour SMA, and with these candles at the top here, that suggests to me that we are going to be crashing back down to these lows here real soon on our healthcare stocks. And to confirm my XLE, we have broken down inside the cloud on the daily, and we are below the cloud on the weekly, and we are below the cloud on the daily. So it's quite a bit more bearish take on the markets with your energy stocks. So just confirming that with our clouds. Now our XLB stock, it's inside the cloud here, and we do have some reference resistance areas with our value area. So, and we topping tails, of course. This is going to have a lot of trouble since we've broken down inside the cloud now. It's going to have a lot of trouble gaining some ground here. So just keep this in mind. I'm not saying this one's going to fall right out of bed. It's a lot easier whenever it's outside of the cloud. So this is one dangers still. If the markets start to go, then this one here is going to fall too. Now we are getting some responsive buy zones on our utilities here, and typically in a rising interest rate environment, you don't want to buy your utilities. But I do want to point out you are at the 200-day moving average on your weekly and your daily chart, or on your monthly and your weekly charts. So, and by far the XLU is the worst sector out there right now. Your XLP, which is your consumer staples, this is another area that tends to do a little bit worse if interest rates are rising, because these companies tend to pay out dividends. Your Procter and Gamble and your Philip Morris and stuff like that. It's right at the bottom of the cloud here, finding some resistance. We tried to go up today and immediately rejected back down. That's a very bearish candle for your consumer staples today. And to round it all out is your XLY, your consumer discretionary stuff. And it's holding out like a champ here. It's had a really nice rebound. It's holding the bottom of value. We are right on the edge here if something were to spook the markets. So just keep that in mind. We were right above support on our consumer discretionary. So if the markets were to start selling off, then you could see some responsive selling in your discretionary areas too. So at any rate, my main thesis here coming into tomorrow, a lot of times I'll say market's going to go up, market's going to go down. And to be perfectly honest this time, without getting up first thing in the morning, I'm not for sure. It did seem, as interest rates were rising today, the market started selling off real hard. And I think the overseas markets are going to sell off in reaction to that. And if in that case, we're going to see the markets open lower tomorrow. That's my thesis on things. But I do think there is a lot of risk with the technology stocks going here, uh, especially with NVIDIA and stuff. I know NVIDIA is going to have very good earnings, but their guidance, so we have to keep an eye on that and see if Bitcoin maintains a bid right through here. If the volatility indexes and the VIC and the Bitcoin and stuff manage to stabilize, we might be able to hold here, but there's still a lot better values to be lower, and I still think there's probably another 10% lower in this market. So that's all I got to say, and I'll talk to you tomorrow.